Picture this. A major client delays payment or an unexpected expense pops up. How would your business handle it? If the answer makes you sweat, you're not alone. But there is a solution: having an emergency fund. It's not just for us as individuals, it's one of the smarter ways to safeguard your business. An emergency fund is your financial safety net. First, it provides stability. Things like late payments, economic dips, or even equipment breakdowns won't throw you into a panic mode if you have a cushion. Second, it gives you peace of mind. When you're not worried about cash flow, you can make better, calmer decisions. And third, it creates opportunity. With reserves in place, you could take advantage of those unexpected things that could come up, like a new deal or a fantastic hire, without scrambling for funds. So, how much do you need in your emergency fund? Well, this is basically a barometer for your personal risk tolerance as a business owner. And generally, a good starting point is 2 to 6 months of operating expenses, and it depends on your business. First, if your revenue is seasonal, you're definitely going to want to hoard away some cash to help you weather the slow months, and you might end up aiming for more overall over time. And if your costs are mostly fixed, like salaries, if you have people as a major component of your business, rent if you have a facility, you could use that as a baseline when you calculate those. So let's talk about how to use that data to build up an emergency fund. First, start by assessing your finances. Calculate your average monthly operating expenses. What are those must pay items like software subscriptions, salaries, rent, and the like? Next, start small. Savings is a habit. Try to set aside a small percentage of your monthly revenue, even if it's just single digits. And try to automate this process or get someone to help you perform this task to help you be consistent in saving. And then, of course, protect that fund. Try to keep those monies maybe in a separate account so it's not tempting to dip into it for everyday expenses. And really only use it for true emergencies, like needing to cover payroll during a slow month or taking care of repairs of critical IT or other equipment. Now, there are some common mistakes to watch out for, that being one of them. Dipping into those reserves for non-emergency purposes can be a fast track to eliminating and draining those reserves unnecessarily. It can be tempting, but please resist the urge to do so. Another mistake is not replenishing the fund after you use it. If you treat it like a priority, like paying your bills, utilities, or otherwise, savings is an important thing to make sure that you funnel money to. And lastly, over relying on credit as a backup plan is definitely not a recipe for success, especially with things like credit cards, which have really incredibly high interest rates, or leaning on a line of credit where you're always borrowing on it without true intentions of paying that down. That could get you hit with interest expenses and terms that could ultimately be a negative output for the organization. So, in conclusion, building an emergency fund takes time, but it's one of the smartest investments you can make in your business's stability and growth. So, start small, be consistent, and remember, every little bit adds up. And if you're ready to get started but just aren't sure where to begin, let's talk. Together, we can create a plan that works for your business and gives you the peace of mind that you deserve.